ESG, almost by definition, is like a million things to a million people. And then even like when you agree on something, if you take a data point and you look at like the different data sources, and I think there are like 7 different data sources, the results vary by orders of magnitude, like wildly different results, because like the methodology of calculating that is very different from one to another. So like you just have really big problems, both in terms of like, what is it we're talking about? And then in terms of like, we've decided what we're measuring, how do we actually do that? And what are the accurate ways to do that?
That's Jim Wiandt, founder and CEO of Spark Network. This is a special edition of the ETF Think Tank Exchange podcast, where a panel of experts, climate think tank, discuss how they navigate the climate investment space. That's the E in ESG. I'm David Dziekanski. Thanks for joining. I'd like to welcome our guest host, Jim Wiandt, CEO of Spark Network. Welcome, Jim.
Thanks. Good to be here.
Before we get into the climate think tank episode, Jim, tell us about what Spark Network is.
Sure. Spark Network is a different way to get people together and learn about interesting things going on in the world broadly.
Okay.
We cover a lot of different topics. We definitely have a focus on the advisor group, which was our strength when in the days when I ran ETF.com, and we had ETFR and the events and everything else. So we're kind of going back to that group a bit, but we're broader as well. We've got a lot of like live music, cultural content, just we were putting things in an interesting and fun context for people to be able to really dive into it and engage.
ETF.com was such a stalwart of research for our industry as the ETF industry is maturing. If you could, please tell us a little bit more about that.
Sure. I mean, ETF.com to me was almost it was a culture, it was a way of life, it was a tribe in a way, right? I think we had true believers in ETFs and kind of the benefits of low cost, broad diversification. And I think that was a powerful thing that we brought. And I think the thing I'm proudest of was that we did at ETF.com was not only did we take a good industry and help to really grow it to be a much larger industry, which I really think we did, but we also made it better. So when we talked about a certain fund and said, this is the best one, assets went into that fund and it pressured competing funds to become better. And in the end, in my view, everyone was served better. The end investor was served better. The products were better and more competitive to other products out there. So I felt like we grew an industry that we really believed in, and we really held its feet to the fire and made it better as well, and kind of had this community around ETFs that's still out there, and that's great to see as I've kind of moved on.
Yeah, we couldn't agree more. You took the initial eyeballs on your website were advisors who were looking for how many stars a Morningstar fund might have to choose for their clients, moving over to the ETF space. And I think you very much evolved the way the advisor thought about picking and analyzing ETFs. Can you talk a little bit about how that translates here to Spark Network?
Yeah. So Spark Network we're kind of looking at where asset management is going broadly, right? When we look at the advisor space. So, there are huge trends toward increasing digitalization, increasing customization, increasingly direct to retail. And I think we're trying to help advisors get out in front of that, right? Get out in front of kind of where technology is going, get out in front of kind of the big macro trends in the economy in ways that they can kind of harness and put to work for their client portfolios. So on the advisor side, we're doing that. On the other side, I mean, we're building communities of people who love music, communities of people who are interested in like the ethics around technology, who want to help make the world a better place through decarbonization, which, by the way, asset management space and ETFs are aligning to that as well. in ways that are making people money and driving impact. And I love that. So that's really where we want to be, at sort of that intersection of impact and sort of upside and innovation and fun in terms of what's going on in the market.
What makes this episode special is that it comes from one of our recent Spark Network live events centered around climate, and we're excited to get involved in this. Mike Venuto hosted a main stage panel on climate investing professionals, including Paula Glick, co-founder of Honeytree Investment, Dr. Linda Zhang, founder of Purview Investments, Gabby Herculanu, CEO and founder of iClimate Earth, and Liz Simi, also co-founder of Honeytree. This group will make the case for climate investing, discussing data-driven bottom-line investments, innovation-driven returns, and ideas that drive change. Jim and I will offer some key takeaways, and Jim Wiandt will talk about the Coalition for Rainforest Nations. So let's jump right in. Ready, Jim?
I'm ready, David.
And I think, Paula, we'll start with you. So Paula, I always love the why question. I love to hear really why somebody would want to dedicate their life to investing in climate change. I mean, it's got to be more than money. It's got to be a passion. So let's hear about your passion.
Great. Thanks, Mike. It's a good question, obviously extremely relevant for entrepreneurs. I learned about socially responsible investing, and that really excited me. And I literally jumped out of the financial industry to join the world of ESG ratings and ESG research. And I worked for 14 years with two of the world's largest ESG research providers. So I gained a lot of knowledge there. I was really lucky to spend my time talking and educating and also learning with sovereign wealth funds, asset owners, pension plans, foundations, endowments, and also investment managers, advisors, the full spectrum really, on the merits of ESG, why you should be looking at it, how you can consider integrating it. So, we were filling a gap in the marketplace, but at the same time, we didn't see, and I didn't see this in all of my years of talking with folks, that you can take the raw data, the ESG, the climate data, the financial data, and mush it all together on equal footing. And prior to that, and what we've seen a lot in the market is it's a secondary process, it's a siloed team, and here was an opportunity for us to build out a framework that would drive at our understanding of purpose-driven companies that really care not just about products and services, but about how they're managing their broader stakeholders, that they realize, in a sense, it's a virtuous circle, that if you manage your clients well, you manage your employees well, you manage the environment well, it's going to create that feedback loop of better long-term performance and growth. So
I love that. I love the multi-stakeholder approach. What's interesting, and one of the things I love about ETFs is it's actually a little bit different from the rest of the asset management world. The largest trade organization in ETFs is actually Women in ETFs, which I know Linda was one of the co-founders. So I thought we'd go to her next for the why. So Linda, let's hear a little bit more about why you decided to become an investment manager focused in climate, and how you see the opportunity.
Well, I have been in asset management industries for many years. 4 years ago, I started Purview for two reasons. I think it's, on a personal level, I have a few family members who are affected by pollution-related terminal diseases. So for me, climate crises and life quality and life itself are intricately linked. And so I want to do something about it through investments. And the other one is business opportunities. In many decades, asset management industries have focused just on risk and return, and they fail to measure the impact on the climate and on humanity, on the communities. And they fail to realize that many industries and companies are facing increasing regulatory risks, and they are also facing being outdated. Technologies and regulations are pushing many industries and companies toward low carbon ways of operating business. So that represents incredible investment opportunities. So that's why Purview is focusing on two things: subsidizing low carbon ESG ETFs, as well as providing multi-asset solutions using existing low carbon and technology driven ESG ETFs.
Wonderful. All right, let's bring Gabby up now. Gabby, tell us your why. Why are you and Shyla doing this?
Yes, our why is decarbonization, Mike. We're looking at the companies where the revenue is in line with decarbonization. And most of the products in the ETF space, the low carbon products, the companies are reducing their carbon footprint by managing their costs. That's a fundamental difference, right? So we shift the narrative and we focus on the shovel makers, right? On the companies with products and services that are directly linked to that decarbonization effort. So this is a very exciting group of stories, right? It's the technologies that are converging and enabling that CO2 avoidance. So our why is very much the motivation to bring that concept to market, that the best way to reduce carbon in the atmosphere is by not emitting in the first place. That's a fantastic, exciting story. And no ETF was representing that. So we develop our own benchmarks. We have two that very much represent some of the most exciting trends that we think are out there in terms of the decarbonization, and that is that convergence of technology. So we wanted to tell that story. There was nobody else with that focus.
Wonderful. I love when people can articulate the why. I think it's time to go back to Honeytree, and let's bring up, we're going to tag Team Liz up, the other partner. And we're going to move a little bit beyond the whys now and get into data a little bit. So Liz, let's hear your thoughts.
There's a lot of greenwashing in our industry, which I think is why all of us are here, why we all founded our firms. It's not good enough to take, the 5 best oil sands extraction companies and say, because, they're doing some emissions reduction work, that they're, changing the world. I think all of us would agree. I think the future is thinking of this ESG data, whether it's climate or workforce, as fundamental company data. Gabby already alluded to how this drives the bottom line, whether you're a consumer or company. If you can reduce your energy costs, if you can reduce your input costs, if you can reduce the amount of recycling you need to pay for, if you can reduce it's all parts of the business. In what's happened in the last decade or so, as things were greenwashed, is it got very narrow. It was about very specific emissions, or whatever industry could advertise that they were doing the most work on it. When in fact, there are so many companies in all sectors in the world doing excellent work, whether it is shoes, plastic containers, Internet of Things, shipping, paper, cardboard, you name it. And it's because those companies, whether they are green tech or a traditional industry, not old industry, but a traditional industry, they understand the bottom line impact of the actions that they're taking. They understand that having the energy required to produce a chip saves them buying all that renewable energy, right? And I would just echo, a lot of companies, especially the ones that we'd hear report in North America on this greenwashing ESG stuff, we're not going to solve any climate issues if all the big tech companies just go buy up all the energy from every wind farm and call that net zero and that they're green. It is about reducing travel, business travel, reducing commuting, changing how we do buildings, thinking it's not just about factories spewing emissions in production. And so that's where I think the conversation will be in 5 or 10 years. And you can see it in the leading companies in the world. They are taking climate into account across all parts of their business.
Wonderful. Let's bring Linda Zhang back up to talk a little bit more about this data. When we're thinking climate instead of just ESG, how do we quantify it? How do we look at this data?
Yeah, data is an important part of it, right? It's not the whole part of the story. But when you look at data, you have to measure your portfolio carbon footprint, right? It's almost like measuring a diet. What is the calorie intake, right? When you measure investment impact to climate impact, you gotta measure what's your portfolio's carbon intensity. For example, S&P 500, let's say SPY, right? ETF has a carbon intensity around 160 tons per $1 million revenues, right? With EcoZ that Purview subdivides, we're able to dramatically reduce the carbon intensity to by more than 80%. So right now our measurement is 28 versus 160. The way to do that is across industry by industry. We need to look at, who are the companies that are the least polluting companies, right? And who are the companies actually improving on less pollution, more efficient usage of resources such as energy and water, and reducing wastes. So those are the actual numbers that are much, much more material for tons of industries. For tech companies, they may not have high scope 1 emissions yet. Scope 2, scope 3 that comes from heating and cooling the data centers, company travels, right? These are all very important measurement for carbon emission for tech, even though they're not fossil fuel companies. So data are important, and measuring the portfolio carbon footprint is equally important. So when you talk to clients, what does that mean, reducing in carbon intensity by 80%? We recently did an exercise, right? If you move $1 million away from funds that are tracking S&P 500, the amount of carbon that you achieved by doing this is equivalent to you're driving a standard combustion-based car to the moon and all the way there and halfway back. So that's the power of your personal decarbonization program. And for those, the weather is nice now, that you're probably going out barbecue. So if you have shift $1 million from S&P 500 like products to this very clean ETFs, your equivalent is like $1 million hamburger, flipping $1 million hamburger, the carbon reduced from propane.
We're going to the moon with Elon Musk here. All right. So the way you're describing it reminds me a lot of the traditional way people think about ESG investing, avoiding the bad actors. And I know you go further, but I think I'd like to bring Gabby back up to talk now a little bit about returns, right? So if we obviously look to avoid bad actors, that is one big component. But then there's the other end of it, which we've seen a lot of excitement last year and even at the beginning of this year with the returns that come from the innovators, the companies that are changing the world. And for 50 years, there's been this ridiculous idea that if I invest in anything ESG, I'm giving up returns. We even had Burton Malkiel on one of our ETF think tank shows, and he argued it. I don't know why anyone would do this. I think performance has finally shown that there's more to it than just avoiding. It's about changing. So Gabby, I'd like to hear your thoughts there.
Yeah, I agree, Mike. It's about changing, right? So our key metric is potential avoided emissions in gigatons of CO2 equivalent per year, right? So that is a tangible metric, and that's how we combat greenwashing, is by stating our purpose. And our purpose is to focus on the companies with products and services that are in line with the solutions that are needed, right? A comprehensive approach to all those relevant solutions. And we estimate relevance by that key metric, potential avoided emissions. So moving away from business as usual to the low emission or even zero emission solution. And in back testing, part of that. So if we look back in the last 12 months, our distributed generation benchmark would have been up 307%. And our global decarbonization enabler, so that story of those 157 companies across 28 sectors, would have been up 167%. So that's a lot of growth. And again, it's a passive approach. So of course, it's obvious that we don't have one company, generating all those returns. That's the most exciting story that I've seen, and I've been, in the workforce for the past 25 years. That's a very powerful story.
That's wonderful. We're going to get into some more of the things that we see coming in the future in a few minutes, but you just described very much that the returns of your indexes or your benchmarks, and pointed out it's passive, and you're also quite diversified, 150 plus names. Let's bring Paula up, because they have a different approach to get to a similar goal. You folks are active and a little bit more concentrated. So
a lot more concentrated.
Yeah. So let's hear about your approach and how you see the opportunities to not only change the world through climate investing, but also generate returns.
Yeah, so our concentrated portfolio is really trying to identify the 20 most responsibly growing companies. So I would say it's a more diverse approach to understanding firms, but it absolutely includes decarbonization. It includes companies that are transitioning through that low carbon economy, and they can be in many industries. So they're not the solution providers necessarily, although some of our companies are actually creating products that are displacing and disrupting. But a lot of them are the ultimate end users. They are the big, large cap companies that will be, to your point, there might be the offsets and the renewable energy investments, but there's also a very heavy, and this is what we look for, is their commitment to the low carbon economy in terms of their materials that they're using, their operations in their energy efficiency approaches, their energy itself, their water use, their waste. So we're looking at a full package approach to how they're managing their environmental footprint. We believe that the companies we're investing also are part of that solution, because they have tens of thousands of employees, if not hundreds of thousands of employees in some cases. And the way they're managing their environmental footprint, again, is going to impact on all these innovators, on all these efficiencies, and it'll really drive things forward in their global operations. And yeah, our performance, is in the 30% return, and over 2020, and we were very pleased with that. So, yeah.
All right, so let's bring Linda back up, because she's also an active manager in this space. Linda, tell us about where you are and what you expect to see from climate investing going forward.
Sure. So, theme one is the renewable energies. So we've been in the theme since day one, since our product launch February 28th, a year ago. There are a lot of American companies who are very competitive globally in solar field. We also invest in transportation, electrification transitions. So it's not just Tesla. So we're very happy we invest in Tesla before its 7-fold increase in 2000. We also invest in companies that are involved with batteries, and we also invest in food industry transition to more plant-based. Just because cattle production is a huge contributor to methane, because cows do need to burp. There are some interesting trends that I've been following. You can feed actually a seaweed to cows that reduce their burping and enhance the greenhouse emission. But we do invest in some of the plant-based food themes, and in terms of on the social side, I think the biggest story is actually access. Traditional large banks are just not very good at giving equal access to different communities and business of different sizes. And fintech, in particular, mobile payment companies that the U.S. are behind other countries in terms of the mobile payment, but it's quickly catching up. And they have been leveling the competitive landscape across business from large to small. So this is absolutely about increased access problem. So that's one of our favorite themes as well.
Wonderful. I want to keep this part of the conversation going. So let's bring Gabby back up from iClima. And really quick, just tell us the most exciting thing you see in climate investing.
We're very excited about distributed generation. Very excited. It has the potential. If you look at the states, right? We are at the very bottom of that S-shaped curve, right? We are the penetration in terms of the solution that epitomizes that idea of distributed generation, right? We're moving away from that centralized fossil fuel dated industry of long transmission lines, right, to the decentralized energy-based renewable resources, right? So Sunrun epitomizes that concept of that solar rooftop, and right now that penetration in the States in terms of the suitable rooftops is about 3%, and that has the potential to go to 15 to 20% in the next 10 years, right? That's dramatic, and that makes economic sense, right? So it makes so much sense from an economic perspective, but also all this positive externality. So we think that this is going to boom.
Okay.
So I'll make this short. Plastic. Avoiding using plastic, doing something with the ocean plastic, making no new plastic products where possible, making everything out of recycled plastic, making clothes out of plastic, making shoes out of plastic, and reducing it all to do stuff while cleaning up the earth. It's a win-win.
Wonderful. All right. At the ETF Think Tank, we want to thank Spark Network for working with us here, and this has been a great panel. I'm going to give Linda Zhang the last word. What you're most excited about?
Yeah, I'm very excited that in terms of our industry, we're finally waking up that we cannot call a ETF ESG fund when you invest in fossil fuels. And there are a lot of new technologies that would replace or complement today's more polluting technology. So I'm very excited for that.
Yeah, David, I thought that what we put together at our climate event was really fun with the think tank concept. The think tank, it was kind of like, I had the idea that it would be funny to kind of turn it on its head, because in a way, think tank, which is awesome, and I many weeks I check it out. It's like the guys hanging out together. And I thought, oh, we should do it with all women and Mike Venuto, and that would be cool and different and fun. And I think it was. I love the idea of like working really closely with Think Tank and kind of like co-branding together and doing things together. So I thought it turned out really well, kind of how we integrated the two companies together.
We are honored to be partners here with Spark Network. So thank you very much. I think one of the most interesting things we saw from this episode is really the evolution of ESG products. And there really is no one right answer. There's different answers for different types of solutions that you're trying to solve.
Yeah, I mean, ESG, almost by definition, is like a million things to a million people. And then even like when you agree on something, okay, so we want lower carbon emissions. So even there, right, like if you take a data point, like the amount of carbon emitted per company, and you look at like the different data sources, and I think there are like 7 different data sources, like metric tons of carbon emitted per company. The results vary by orders of magnitude, like wildly different results, because like the methodology of calculating that is very different from one to another. So like you just have really big problems, both in terms of like, what is it we're talking about? And then in terms of like, we've decided what we're measuring, how do we actually do that? And what are the accurate ways to do that?
You know, from the analyst's perspective, what I find most fascinating is even in just the last 3 years, the average kind of viewpoint of what ESG is, as you mentioned, has just evolved so much from a societal perspective that this is not a set it and forget it, look at it once and you have your list of companies and never revisit it. There is a lot of intelligent work going into structuring these products, and they're products that will continue to evolve over the course of time, just like an innovation fund would, and look at new ways and new lenses to view the world. There's continuously new lenses and metrics to consider when viewing an ESG investment.
Absolutely. Right. And I think also, it's almost like indexing also was, when indexation first came out, it wasn't thought of as like an investable product. It was thought of as like how we sort of say what the market's doing. And over time, as investment products evolved, the indexes did too, to make them make more sense and be more investable and reflective at the same time. And I think you're seeing that development, happen in the space. And I think there's also a really interesting interplay between sort of performance in the market and impact. And both those things obviously are really important. And like how they align or how they conflict to each other is at the core of how you think about this space, I think.
It's funny you mentioned indexes as investable products, because one of the core philosophies of Toroso, founded by Mike Venuto, is really that markets evolve and change. And we think one of the biggest turning points in the index history is when they all shifted from float adjusted, from away from true market cap, because they became investable products and not just benchmarks. But that's a rabbit hole we'll save for another episode. So
I'm sure we can find other rabbit holes to go down if we want to.
Absolutely. Well, we always like to end our episodes talking about a worthy cause. And this one is close to you, Jim. It's the Coalition for Rainforest Nations. Why don't you explain a little bit more about what that is and how people can donate?
Yeah, I mean, it's dollar for dollar, arguably one of the greatest impacts that you can have on reducing carbon in the world. The rainforests are one of the biggest soakers of carbon that there is. And so preserving them is an enormously powerful lever. And the cost to do that is not that much, right? And this organization, I think the website is rainforestcoalition.org. I think that's the website. It basically organizes all these different countries which have 90% plus of all the rainforests in the world, and focuses on preserving those rainforests and making it pay to preserve those rainforests, because as pollution and carbon is priced, then that has a real financial value, right?
Absolutely.
Soaking up that carbon has a real financial value. And so that's what they're focused on. And I think it's a great cause, and it's just a direct impact organization.
We invite all our listeners to please check them out. And as we wrap up, we'd like to thank Paula Glick, Linda Zhang, Gabby Herculano, Liz Simi for their thoughts from the Spark Network for the Climate Think Tank Exchange discussion. And like to thank our special guest, Jim Wiandt, CEO of Spark Network. Thank you for being with us today, Jim.
Yeah, thanks, David. And thanks to the team at Toroso and at ETF Think Tank. Really fun working with you guys.
You can learn more about the ETF Think Tank and Think Tank Exchange by visiting etfthinktank.com, your source for ETF ideas, thought leadership, strategies, tools, and growth tactics. That's because our value proposition is to enhance yours. Until next time, keep the exchange going with your clients. I'm David Dziekanski. Take care.
Views and opinions expressed during this event are those of the participants and do not necessarily reflect the views of the sponsor or organizer. Information set forth during this event has been obtained or derived from sources believed by the participants to be reliable. However, neither the sponsor nor the organizer make any representation or warranty, express or implied, as to the information's accuracy or completeness. products. Nor does the sponsor organizer recommend that the information shared during this event serve as the basis of any investment decision, and it has been provided to you solely for informational purposes only, and does not constitute an offer or solicitation of an offer or any advice or recommendation to purchase any securities other than financial instruments, and may not be construed as such.